Taxation Part 1. Types of taxes and progressive taxes. A macro lesson with Steve Reff and Eric Allmeroth. There are three certainties, Reff. What are they?
Number one, you will live. Number two, you will die. And number three, you will pay taxes.
The average number of days worked to pay taxes by type of tax and level of government. Usually what we seem interested in is the money out of pocket we pay taxes with. This is an interesting way to look at this, the amount of days work it's actually costing us.
Eric, when I look at this graph here, it says it takes me 113 days to pay taxes. So if I just started working from January to somewhere in mid-May, that would be 113 days. That's how long I have to work just to pay my taxes. Wow. And I see how it is broken down into the number of days it takes to work off these taxes.
To pay just the individual income taxes alone is 46 days of hard work.
And then your Social Security tax is taken out, and that's another 26 days. So coming out of your paycheck, it takes quite some time.
And this also breaks down how many days it would take to pay your federal taxes, state and local taxes.
113 days, mid-May.
What are we talking about with types of taxes, Rev?
Well, there's various taxes. You have federal taxes, you have state taxes, county taxes, city taxes, you have excise taxes. There's a massive amount of taxes. And as you read through these, accounts receivable, building permit tax, capital gains tax, cigarette tax, corporate income tax, and so forth.
Fuel permit tax, gasoline, hunting license, inheritance, interest expense, which is tax on the money, inventory, IRS interest charges, tax on top of a tax, we call that, IRS penalties, another tax on top of a tax, liquor tax, local income tax.
Wow, I'm starting to get buried here, Eric. There's luxury, marriage, Medicare, property, real estate, recreational, road usage, sales tax, school taxes, septic taxes, Social Security taxes. Oh my gosh, Eric, I'm drowning in taxes. I'm melting.
And of course, as economics teachers, you and I have to pay a lot of those luxury taxes. You know, I've seen your wife in jewelry that looks a lot like that on several occasions, I think, right?
Yeah, that's because she's a luxury. I could only afford inferior goods.
I call these palaces on wheels, these RVs. So you go to a campground now and people are not exactly roughing it. So now let's look at state income taxes, state employment, telephone taxes, all the way down to telephone recurring, non-recurring charges, toll bridge taxes, tunnel taxes, trailer registration, tax utility, vehicle registration, vehicle sales, watercraft registration, well permit, and workers' compensation. That's a lot of taxes, Rev.
There's a ton of taxes. This is amazing how many taxes we pay. No wonder it takes 113 days.
So now let's look at the methods of taxation we deal with. The first is called the progressive tax. Those who earn a higher income pay a higher percentage of their income in taxes. Picture here of the early robber barons, the guys making the most money back in the late 1800s. Those who earn a lower income pay a lower percentage of their income in taxes. Reff, can you give us an example of a progressive tax?
Yeah, probably the most well-known one is the individual income tax. And when we're looking at this chart here, it's single income payers, not families. And if you notice, there's different tax rates. The wealthier you get, the higher the marginal tax rate. Now, please realize you've already learned the term marginal. Marginal means additional. When you look at $319,000 and higher there, and they're taxed at 35%, it doesn't mean that all of their income is taxed at $319,000 at 35%. What it means is from 0 to 7,150, those dollars are taxed at 10%. And if you look at 7,151 to 29,050, those dollars are taxed at 15%. So please realize this tax rate is not an average, it is a marginal tax rate. So if you looked at the average tax rate of higher paying earners, their average is a lot lower than 35%.
By definition, what is a progressive tax? A progressive tax system is when the tax burden increases as income increases, which increases rates as taxable income increases. It is usually segmented into tax brackets which progress to successively higher rates. A progressive tax rate may change from 0 to 45% from the lowest to the highest brackets as the taxable amount increases. In a progressive tax system, a taxpayer's marginal tax rate, as Reff just pointed out, is higher than their average tax rate.
Did you know that the highest marginal tax rate occurred during the 1960s? That if you made a certain amount of income, now obviously you're going to be wealthy, but your marginal tax rate was 90%. That meant the government, even though you're wealthy, each additional dollar you earned over that, the government took 90 cents and you as a wealthy person only got 10 cents. Do you think as a wealthy person, I want to work any harder? The only thing I'm going to work hard at is getting accountants to reduce my tax liability.
Those poor wealthy people.
Yeah, it's the poor rich.
So here's some graphs which indicate marginal increases in taxes. And I think that is the key point here. The thing is, they're not paying 39% on their entire income. They're just paying 39% on that last marginal increase.
I like your graph on the right here where you have the marginal tax rate is higher than the average because each section of dollars is taxed at the marginal rate all the way to the highest rate.
So let's look at the types of progressive taxes. There's investment income taxes, taxes on investment income generating activities. Tends to impact those with excess money who save and engage in investment.
You know, there's taxes on interest earned from savings or investments. And this is considered in finances what's called passive income earning, where money is making money.
Right. And passive income means it's income that comes from not having to work hourly or on salary, but money that is coming in based on some other project.
And speaking about projects, what's another one?
Rental earnings, although there's a chance to deduct all costs associated with completed building operations, and even upkeep and things like that. This is a very progressive kind of tax since it targets rental property investors.
And the one advantage of this rental property is you get to subtract any expenses. If you painted the property, updated the property, whatever your expenses are, you run through your home business, basically. That reduces the profit that you make off the rental, and you only pay taxes on that profit.
And I know people who have rental properties showing very little income based on the costs.
There are high costs because tenants tend to not take care of the property as well as the actual owner.
Then there's estate taxes. This is a form of tax levied against the assets of those who are deceased. It typically applies where the value of the estate of the deceased is above a certain amount as set by the government.
Currently, as of 2021, 11.7 million, but I don't know what's happening with this Build Back America plan. So the first 11.7 million is not taxed. And so the wealthy pay a higher percentage of their income in taxes because if you inherit just under 11.7 million, you pay no taxes. So if you're poor, it benefits you more than if you're wealthy.
Tax credits. These are benefits and perks awarded to less fortunate citizens by the government to help them save some income. There are a number of these, including earned income tax credits, elderly and disabled tax credit, child tax credit, or retirement savings contribution credit.
And I like that term credit because the nice thing about credit is a subtraction from your tax liability, where a deduction only you get to subtract your income. And if you have a choice between the two, you'd much rather have a tax credit than a tax deduction.
The advantages of progressive taxes. There is a proper distribution of the tax burden. Those with broader financial shoulders carry the heaviest burden.
We've had progressive taxes ever since you and I have been alive, and it doesn't seem like anyone in particular has been at a huge disadvantage because of this. And possibly the social benefit has far outweighed the social cost of a progressive tax.
Well, I think it's pretty obvious we're not going to be able to pay too many taxes on the shoulders of our poorest or the lowest income people in this country. And if we're going to support the jobs and infrastructure we appreciate in this country, dams, roads, bridges, highways, education, police departments, military, if we're going to support those projects, we have to get the money from somewhere. And so it's going to have to come out of the pockets of the people that have it.
Well, the working class have it, and so do the wealthy. So should it come out of the working class pocket?
It does, because the working class, middle class are the majority of taxpayers. So the second bullet is there is a reduction in tax amounts for the less fortunate in society to ensure their tax burden is not crippling. And 3, the government collects more tax revenue as compared to a proportional tax system.
And I think that's the important part here, the difference between a progressive and a proportional, and that's the tax revenue that the government collects. And the reason that I say that in this day and age is because of 2 things, is increase in deficit spending and the increase in our debt. We're going to have to pay some of this back sometime in the future, even though there are economists out there that think it doesn't matter. My belief is, because I've retired, I've saved up, the only way that I could have retired and made myself better off in the long run was to make sure I had no debt. And so individually, I think whatever happens to the person should also be what happens to business, government, global economic. But that's a normative statement. Progressive taxes aren't bad. It's to what extent and who should be taxed is then judgmental.
Taxation, Part 1. The end.